Welcome everybody. SF Live episode 87. You can see we set up a new studio, so we hope everything works. We set this up over the weekend, and Don Durrett is our guinea pig today as our guest to test the new studio with us. Don will be joining us in a couple seconds, but please be reminded and make sure to subscribe to our YouTube channel, to our Twitter channel here. Hit the alert button, hit the subscribe button. That way you get notified when we go live with another update or an interview. And it is my pleasure now to introduce Mr. Don Durrett. And Don, how are things? How are you doing? Thanks for joining us today.
Kai, thanks for having me on.
It's a great pleasure. And you're based just outside of Las Vegas. You're in Henderson, Nevada. And just give us a bit of background. What brings you to Nevada? Like, I'm not sure if you've been or raised there, but give us an overview of what's happening and who is Don Durrett.
So I escaped California for the fourth time. I moved here in March. So I don't think I'm going back this time. I think this was an official escape. So family kept drawing me back. So I went to Colorado and I went to Arizona twice, and now here. Every time I quit my job and leave. That's been my modus operandi. I'm not leaving because for work. I usually when I leave, it's more of a, it's time to do something new, if you will. I've been wanting to get out of California now for over a year, so I finally escaped. So I've worked in IT for 20 plus years.
I was going to say, currently, you quit your job recently. I saw that on your LinkedIn profile. So give us some more color. Yeah. Is it really the gold market that's pulling you in now?
And my age, I'm getting up there, kind of retirement age. So I've decided to focus the majority of my time on my website. And I'm also doing some consulting. So between those two, I'm busy.
Perfect. I've noticed you popping up more and more on my Twitter feed. So that's why we reached out, and we're really keen on talking to you about your insights on the gold and silver market in particular. And since you're based in the US, of course, we recognize any American as an expert on American politics, of course. So we want to see or hear your opinion, of course, on the US elections and how we as investors can sort of play that. But I want to start actually with the gold market today. I'm just looking at my screen over here, and we're down 1.6% at least in the gold price today, and silver is down as well, over 4%. What's triggering the move in the markets? I've noticed in general more of a risk-off approach in the gold sector. But what's your opinion on the recent, let's say, sideline movement or sideways movement and also decline today?
Right. So basically, we've just seen some exhaustion in gold and silver. So we just had this big move from March and through the end of August, and gold and silver kind of got exhausted, and we saw, all-time high in gold, almost 2,100. So we got to like 2075, and now we're back to today under 1,900, and so we're in this kind of pause mode. So we have to kind of figure out, how long the pause is going to last. When are we going to make another run? So I always look at, technical charts, get a good idea for entry points. Also even get an idea for exit points too. Like silver's made this run, when it made that run up to 29, and even gold, all-time high. I mean, you can look at some of your positions and take some off the table, and I think a lot of people have, because now we're in this correction mode. So now it's how long it's going to last. So for me, I tweeted today because, we had a bit of a sell-off in silver, and some people were saying, this is the bottom. People keep saying this is the bottom in silver. And I've been saying now for actually, September that, we're in a correction mode and we're going lower.
Yeah, you mentioned some price targets as well, like where silver might be heading in the next few months. So maybe you want to give us more detail there.
Yeah, so again, going lower. I think maybe not. Maybe 24 is gonna be the bottom, and now we're gonna trend all the way up. But I think that the election. So October, I thought it was possible for it to have some volatility, but it looks like the market isn't nervous about a possible Democratic administration. The market's doesn't seem to be afraid at all. They know what they're going to get with Trump, so the market's not really showing us there. But they're definitely not nervous of a Democrat. So that shows me we're kind of stuck in a trading range. Some people say we're going to have a melt up, and we're going to kind of, the S&P is going to just fly past the all-time high and head to 4,000, maybe this month. And I don't think so. I think the market has to digest this election a little bit. And I think that after the election's over, that if Biden does win, I think that there's going to be a lot of nervousness that during that digestion. And the reason why is because I don't think people realize what's happening politically in the United States. So if you go back to the 90s, you look at the Bill Clinton administration. Bill Clinton was largely, he basically his economics were basically very moderate, Republican. There's no progressive ideas there at all. So what Reagan put in place in the 80s, when Reagan brought in supply side economics, that carried over into the 90s, didn't change at all. So when you talk about supply side economics, what you're really talking about is supporting the supplier. So you're supporting the corporation, you're supporting the small business, and you're doing everything in your power to support them, not to negate from them. So then, we had the George Bush in the early 2000s, of course, he complained to be a supply sider. Supply side and globalism goes hand in hand. This has been in place since the 1980s. Reagan basically brought in the whole concept of globalism, free trade. That's what globalism basically means. So George Bush, the early 2000s, kept it going. And then Obama came in. Obama, the first 2 years of his administration, 2009-10, he controlled both sides of Congress, but he did not attack supply side economics. Did not. So he's basically, and then after 2 years, his State of the Union speeches, sometimes he would say some anti-supply side stuff, but he never did any policy. In fact, policies, he went through global trade. He was very friendly. EP was very friendly with Asia, all free trade. That's globalism. And he never attacked corporations. That all is changing right now. And everybody thinks that Joe Biden is going to continue on with these, the same policies as Obama era. I say, wait a minute here. We're going to see some chinks in the armor as far as supply side goes. That's not going to be digested well with the markets. So the markets right now are not reflecting that. That's why I say that in November, if Biden does win, that you're going to see volatility, you're going to see some sell-off. So then silver, I think, is going to find this bottom somewhere between $22 and $18.50 is my thinking. Maybe 22 will hold. Gold, I think, is going to go under 1,800 and possibly all the way down to 17. So somewhere between 17 and 1,800, I think those are going to be your bottoms in November, all the way up to mid-December. Then we get a rally in late December, all the way through January, and then we get a really nice rally. And I think silver is going to get into the 30s in the first quarter of next year.
Okay, I love those price targets and like your time frames that you're giving as well. And I got a question there. Is like markets are usually forward looking, right? They usually price in the future, or they try to. And the market's moving up. They're not pricing in any volatility, or even like based on if Biden were to win, pricing in that volatility. Why is that? Why are they still so bullish?
Exactly. And nobody's asking that question. Why are they so comfortable with a Democratic administration that appears to be very uncomfortable? Not the entire Democratic Party, but a big section of it is beginning to become uncomfortable with supply side economics. Now, again, supply side economics says that we're going to do everything in our power to support corporations and business. That means we're not going to remove their tax breaks. No. We're not going to remove the regulations. No. Well, Biden has basically said in his platform that he's going to raise the corporate tax rates to 29%. That is not, really supply side economics. He's also said a lot of things around regulation, especially energy regulation. So all this stuff, you're right. It's like, why is the market at an all-time high when we're going into this administration that's really changing the whole political dynamic? And nobody's really talking about this. I haven't heard one person on television, I don't watch a lot of television, but I haven't heard one person say that supply side economics is threatened. I mean, they talk about socialism, of course, they talk about that all the time, but nobody's really talking about supply side economics, which I find kind of interesting. Because to me, gosh, I mean, I lived through the 80s. I saw that all go put in motion. It's been put in motion, and that's what we live by today. And everybody thinks that's the way it's always going to be.
So is the gold and silver market more of a realistic indicator of what's happening right now? or should be happening in the market. We're seeing a
Yeah,
sideways movement with those mini, let's call them mini crashes, where technical support seems to be holding. We're still right in our trading range. So is the gold and silver market more of a
right.
realistic reflection of what should be happening come November 5th?
Yes. So this is why you have to be excited if you're a gold and silver trader. Gold and silver is basically smelling this change I'm talking about. So I actually got involved in my first gold and silver investment was 1991. Out of the 1980s, I saw basically what Reagan put in motion. So Reagan, they didn't call it MMT then; they called it Keynesian economics. Keynesian economics, you're only supposed to stimulate demand when you have economic problems. That's what Keynes did in the 30s. But Reagan said after we came out of recovery, 82, 83, Reagan, he kept the pedal to the metal as far as debt goes. Debt kept going higher and higher. So Reagan just kept stimulating. And they call that, basically Keynesian. So he basically took supply side economics and then he stimulated on top of it. And then we did kind of the same thing in the early 90s. And then they kind of took the pedal off in the late 90s where they balanced the budget. But all of that, so I could see what was happening. Basically, the debt was we were going to use debt to create growth. And that's what we've been doing now for 30 years, debt to create growth. But now it's requiring more debt to create growth, which is dangerous. And that's where gold basically says, oh, you guys are playing with fire here. And the money supply has been exploding. As the money supply explodes, gold starts to become more attractive. Now the whole issue of MMT comes into play. Can MMT really work? So everybody right now is assuming it worked, but nobody really thinks in terms of this is an experiment. MMT is an experiment. It's never been, the first time it was ever even tried was by the Japanese in early 1990s. And they got away with it. They didn't create inflation. And the reason why is because they weren't giving money to people. All they were doing was basically buying stocks or buying bonds or buying out companies that were bankrupt. So the money never you didn't have that volatility and you didn't have that turnover. So they didn't get inflation. And now we think, but the thing that's dangerous is now in the US during this pandemic, yeah, we're doing that what Japanese did and we haven't had inflation explode, but we're also giving money away to people. And that creates potential problems, inflation, higher gold prices.
Maybe because you mentioned they were about to go bankrupt or bankrupt companies back in Japan. Like I think the pandemic is now creating a lot of bankrupt companies in the US or here in Canada as well. Just going out to the shopping malls, just looking at the little restaurants down there. Some of them are small chains. They're all going to go belly up. Like I'm very negative. Like I was in Toronto last week for a business trip. It's even worse than here in Vancouver. It's dead. They just closed the restaurants again. I see a very similar pattern forming now. Businesses going bankrupt. It starts with the mom and pops not being able to pay their rent for their little kitchen in the shopping mall, to the real estate companies not being able to hold their target price or their guidance, and they're going to crash and they're going to go bankrupt because they can't refinance for cheap. Like, do you see that repeating, or like what's the difference to Japan in that regard?
This is a really good question. And again, I say that MMT is an experiment, so we don't know the outcome. So I'm someone who always, you don't want to assume things. You don't want to assume that gold's going to go to 3,000, silver's going to go to 100, without, kind of looking at all the possibilities that could prevent that from happening. Now, MMT could kick could kick the can down the road. You mentioned all those businesses going bankrupt. Well, what if they governments just start printing money and bailing all these companies out? And then they do UBI as well to help the consumer. So they start doing supply side and demand side. Demand side is when you basically give money away. What if they do both of those things and then inflation basically stays somewhat in check? In the U.S., we can't. If we go over 3% inflation, we're pretty much bankrupt because our interest on our debt, we can't afford 3%. We can only afford 1%. So if our 10-year bond is currently about 1.5, if it goes up to over 3%, we got a problem. So that's the scary thing with MMT. But simultaneous to that, we don't know how well it's going to work. Like right now, I think the reason the stock market is so high is because of confidence in MMT. I mean, right now, I mean, it's kind of crazy how much money the deficit this year is going to be 3 trillion, I think, and nobody's even
Yeah, like it
blinking,
goes unnoticed on
and so
Twitter
that's
when I see it pop up, the debt clock, right? So
confidence the MMT can work. So I'm somewhat, as an investor, gold investor, I'm a little nervous that MMT could kick the can down the road. That's a possibility. Other people are like, no way, it's impossible. We're either going to get high inflation, which is going to, or we're going to get, GDP is going to crash, but gold's going up. There's nothing going to stop it. We're going to 3,000. We're going there. I'm confident that in 2021 we're going to make a run, not so much based on MMT, but based on the technical chart of gold and silver. We had the 6-year base. I just don't think, and now we're breaking out from that base. I don't think that we're gonna that base is just gonna puddle, just kind of die in 2021. I think we have to have some type of a run. So I'm thinking myself, I think we're going to get to $50 silver, and we're going to get to $2,500 gold. Now, after that, anything above that, that's where MMT comes into play. How well MMT works, how much inflation we have. But I'm pessimistic for next year, 2021, just because I think that another one is we've had this 9-10 year rally in the economy. Now it hasn't been a great, rally or recovery, but we've had one. So are we really going to have just a little hiccup in 2020, and then in 2021 we just blast off again? So for me, that's another one indicator that I think 2021 is going to be a little messy, and it's very likely 2021 economically could be worse than 2020. That's a possibility. So gold and silver look set up really well for 2021, but keep your eyes open. Don't have your rose-colored glasses too thick, because there are some possibilities here where they could kick the can a little bit. I don't know what that is.
I want to spend the last couple of minutes of our interview actually talking about how does that distill down to the junior mining sector, right? You're following junior miners as well. How do you transform that over? Your theory, like how is your investment style changing, or how are you positioning yourself now in the junior miners for the next 3 to 6 months?
Well, I'm going to answer that question a little indirectly. I usually answer questions directly, but I'm going to do this one a little indirectly. So how am I positioning myself? I'm thinking in terms, because I'm going to answer this for everyone. I'm thinking in terms of this bull market playing out. So if this bull market plays out, gold is basically going to find a bottom, and then it's going to make a rally, and it's going to go to 2,500. So we're going to see this $2,000 to $2,500 move. We're going to have a $500 move. And in theory, that's not the end of the bull market. It could go to 3,000, 3,500. Right? So we're getting ready to see a really big move. So if that's the case, you have to think in terms of your portfolio in its current state, what you're going to do with it. So I'm personally I've created an exit strategy, and I wrote an article on Seeking Alpha, how to ride this bull market to the top. So the way that you do that is every time gold goes up, so for me, it's too early to get out. But when gold gets to say 21, 2,200, I look at my portfolio, I see what are the big winners, and I sell like 75% of those, only a few, right? And then I let 25% run. You don't want to sell the whole thing. Keep a little bit, because if gold goes to 3,500, that 25% will make more money than your previous 75%. Then every time gold goes up, and also silver goes up $100, $200, you look at your portfolio again and you take your big winners and you take 75% off. So you're taking money off the table as it goes up, but you're keeping 25% as well. And you basically, and then that 25% that you keep, you do a stop loss on it. So maybe you have 20% stop loss, and then you keep it trailing up. So that eventually that 25% is going to get stopped out. But who knows how far you could ride it. If we don't get a 20% correction, you could ride it all the way to the top. And then when it finally does that 20% correction, you're going to get a big chunk. So that's what I'm going to do with my portfolio, and other people can ride it to the top. That way you basically don't get hammered if you try to ride it all the way top, and then we get that correction, you don't
And
lose all that
we
money.
don't have to talk about names, but sort of type of companies that you're positioning yourself in right now. Is it more the developer space? Is it the producers, royalty companies? Who are you focusing on?
So my portfolio, I believe that producers are where you make most of your money, because producers, every time gold goes up $50, $100, it goes right to their bottom line. If you look at Kirkland Lake's earnings report that came out yesterday, it was phenomenal because they have these huge margins. Their cash balance is up to $850 million. They have no debt, and their share price has done really well. Their balance sheet gets cleaned up. So I really like the idea of this leverage you get profit-wise, cash flow-wise with producers. So in my portfolio, I have allocated 13% to exploration companies, which I think is high. I think 10% is probably enough. And then I have, I think, about 30% development, which is way too high. And then like 45% producers, and then I have bullion as well. So 45, the big chunk is in producers, and I think that's kind of the way to go. That's how I've allocated. But I cover the whole thing, so I'm holistic. I do exploration, development, and producers as well.
Fantastic. And you hinted the cash flow generation, for example, by Kirkland Lake. They put out a fantastic quarter, although Mikasa sort of underperformed a little bit. They're hoping to catch up this quarter. But M&A revival is a big topic. We saw Northern Star and Sarazen merge in Australia, and we haven't seen a lot of M&A activity in this space. Like, is the Q3, the cash flow numbers, are they forcing now companies to look at M&A more aggressively than before?
Well, M&A is a bit of a mystery to me. I don't know why there hasn't been more. I could make an assumption that the reason why is because companies are holding on to their properties, holding on to their projects, because I know they're getting phone calls. I think everybody's saying no. I think that's the reason why we're not seeing a lot of activity. People are just saying no, no, no. And the reason why they're saying no is because nobody wants to pay high premiums. If you look at the takeouts, so the recent one, T-Mac, they got taken out by a Chinese company. I think they paid like 40% premium. I mean, that's the most anybody wants to pay. Then you had Guyana Goldfields got taken out, another Chinese company, and that was like another 30 to 40% premium. So a lot of these companies are like, you want to give me a 30 to 40% premium? No, that's not enough. And nobody wants to pay, 80%, 100% premiums now. And so what's happening in the past is people have paid for the gold in the ground or the silver in the ground, they paid really low amounts. I mean, I've seen a lot of takeovers at $10 an ounce for gold in the ground. I mean, it's ridiculous cheap. 20 is kind of normal, 20, 30. Nobody should be selling for less than 50, and 75, 80 for an exploration development story is really as cheap as anybody should be selling. But I mean, I'll just give you one example. Say Vista Gold. How come Vista Gold hasn't gotten taken out yet? Nobody wants to pay for it. So once we get to once we get over 2,000, we stay over 2,000 for 4-6 months. I think you're going to see the mergers. I think people are going to start paying, and we're going to start seeing some higher takeouts. We're going to see more takeovers. There's no doubt. The key is going to be how much money people are paying for the gold and silver in the ground. I think people are. Hopefully, we stop seeing these $30, $40 takeouts.
No, there should be, and the average takeout price I think is even $120 an ounce. I'm not sure if that. I think it's US dollars. So we need to say way higher takeover prices as well. We're out of that bottom right now, and I think also the mega mergers haven't created the M&A opportunities that we all thought would happen, right? Because they're all sitting on their assets now, and all of a sudden they're making money. So they're not selling those cash machines, right? Those cash cows. Don, we're at the end of our time here, unfortunately, but I really want to get you back on maybe November 10th or something. I think that's the Monday right after the election. I'd love to get your insight there. It was fantastic talking to you. Really appreciate it. Now it's time to toot your own horn. Like, where can people find you? Give us an update. Like, how can they subscribe to your service?
It's goldstockdata.com. So my website has a really large database. So we have over 800 gold and silver stocks in the database. We pretty much cover them all. And we have a search engine in the database. So it's really easy. Like if you want to find every mid-tier company, just hit the category mid-tier and they're all going to pop up. So the database alone, plus you get a newsletter. My newsletter comes out every month, which I think is really good. I have like 10 different lists of stocks in there. So it's and then we have a one final thing. The forum is becoming really valuable because we have and we're up to over 800 members. So people in the forum are sharing their ideas, and so the forum itself is starting to add a lot of value to the
Fantastic.
site. So that's what I.
Fantastic. Don, I really appreciate you coming on this afternoon, and thanks for being our guinea pig for trying out the new studio. I hope it all worked well on your end. I know we had slight lag, I think, here on this side. We're still working out the kinks. Everybody else, I really appreciate you watching. Thanks for tuning in. We're going to upload this to YouTube, Spotify, and Instagram as well, and we're going to make it available. Make sure to hit the subscribe button, the alert button, and to follow us there. Leave a comment. We'd really appreciate it. Don, thank you so much. We'll talk again very soon. It was a great pleasure.
All right, Kai. Thanks.